I can remember back in 2013, I went to a goal planning, business planning conference. The speaker, Rick Ruby, one of the top coaches and trainers in the mortgage and real estate space, all he talked about was money and planning and goal setting, but money was the core of all of his conversations. And in those conversations, he talked about having your number. He asked me, Dan, what is your number? At the time, I had no clue. I was about 38 years old, and I had no idea what he was talking about in regards to my number. But as the conference went on, what I soon came to understand is that the idea around working, the idea of owning your own business or going to work every single day has to be for a reason. You see, I think society has programmed all of us to graduate high school, go to college, accumulate debt, get a job, accumulate more debt, buy a house, accumulate more debt. That's what I do for a living, mortgage. Rack up credit cards, buy auto loans, car loans, help our kids go to college, racking up more debt. And somehow along the way, we're supposed to save up enough money to contribute to our retirement and then retire. But society has us doing that until we're 70, 60, 70 years of age. And then if we're lucky, we get to live an extra 10, 15 years and enjoy the fruits of our hard work, our labor. I don't know. And so what I started to realize early on in 2013 and 2014 is that I had to make an abrupt change in my life. I needed to understand what my number was as quickly as possible, get to that number, and start working my butt off every single day to contribute to chipping away at that number. You see, it's one thing I'm going to share with you today on how to identify your number. It's another thing to make sure that you get to that number sooner than later. So today, as I talk about what is your number, I'm going to talk about a principle that I've learned. It's called the FIRE principle. And I love it. It's titled FIRE for a reason. Financial independence, retire early. And the focus is retiring early. The focus is that retirement is not an age. Retirement is a number. I want to welcome you back to another episode of Making Sense of Your Markets. My name is Dan Keller. Today is Monday, October 18th, 2021, and I'm bringing you another piece of information that is going to help you as a client of mine, as a friend of mine, as a subscriber or viewer on social media of mine to come out the other side of home ownership in a better financial position as a result of these weekly videos. Today is going to be very, very impactful. So we're going to talk about mortgage interest rates. Are they up or are they down week over week? We're going to talk about what is your number and the FIRE principle and how it's going to help you. And then lastly, we're going to talk about week 26 from the 7 Habits of Highly Effective People. We're halfway through this program. It's a 52-week program, and it's getting better and better week after week. So let's jump into mortgage rates. Are they up or down week over week? I want to say, if anything, they're slightly up, but they're about the same. 30-year fixed rates are still in the upper twos, 2.99 to 3.125, depending on your credit score, the points you want to pay, your down payment, etc. 15-year fixed rates still in the low twos. So if you have a mortgage, it's a great time. It's still a great time to reevaluate how you're spending your mortgage money every single month to see if there might be a better use that'll help create more wealth over time with a shorter term loan, a smaller interest, shorter term loan like a 15-year fixed. Reach out to me if you have any questions on that. So let's talk about your number and the FIRE principle. Like I said, the FIRE principle is financial independence, retire early. And the idea, the focus on that is the financial independence aspect of it. Financial independence means that you don't have to go to work. You can live off of your investments and do it sooner than what society will tell you is 65, 66, 70 years of age, right? So how do you get a better idea of what is your number? Simple formula. You go to budgetwithdan.com, free downloads. You don't have to put your name or anything in, but you can see the worksheet that I use. So you need to calculate your entire monthly expenses. So let's say your monthly expenses, I'm just going to use a small number and a round number, is $3,000 a month. All your bills, food, rent, mortgage, everything at car payment, credit card payments, everything added up is $3,000 a month. Multiply that by 12, so that's $36,000 a year to live. Divide that by 4%. That's the return. That's what you can withdraw from your investments without necessarily losing money. That's what your investments can pay you. 4%. So you divide it by 4%, you get $900,000 for this. So for this particular client that cost them about $3,000 to live, they're going to need about $1 million in the bank in order to pay for that lifestyle, that quality of life. Your number is different. My number is different. Find your number, what your number is now. If you're having a hard time getting by, or if you think you can live off of that number when you're retired, great. If not, add some money to it. Mess with that equation. Now, the second part of this exercise that I had to do is figure out how to get to that number. You know how much money you're saving every single month. You know how much money you're saving every single year. You need to get that money multiplying as fast as possible. Plug it into compound interest. If you got to invest in real estate, invest in real estate. Invest in the stock market. Invest in things that will multiply your money. If you have questions on stuff like this, especially with real estate, reach out to me. Happy to introduce you to a financial planner or a real estate agent that specializes in investing to help you better understand or better multiply your money. I hope this information was helpful. Let's wrap up with this, and I'm just going to read this to you. It's a real short message, but it's titled Apologize this week, week 26. Dr. Stephen R. Covey says, you need to ask yourself, who needs an apology from me? Saying you're sorry when you've made a mistake or hurt someone can quickly restore an overdrawn emotional bank account. It takes courage. Remember, last week we talked about the importance of having an emotional bank account, making those deposits into yours and to others' emotional bank accounts. So I hope this information was helpful. If you have any questions, I want you to reach out to me. I look forward to bringing you more information over the week that'll help you come out the other side of home ownership in a better financial position. Until then, if you need anything, reach out. Bye for now.